Let me start the recording. There we go. All right. This is part 1 of 2. Now, I originally was advertising that these 2 webinars, there's another one on Tuesday, are the same. That is not the case. I had to change that slightly because there's just too much material to cover in just one. So, this one is going to cover what we call the smoking gun. And next week, we'll cover the other leg of this service, which is called the high premium report. I'll briefly cover the high premium report tonight, but there are 2 different services under the same banner, and you'll understand that more later. Anyhow, let me make sure the screen is correct. Yeah, okay. Wall Street smoking gun. Now, I'm going to begin with a bold statement, which I've mentioned before in other webinars, and that is fundamentals, which is the study of companies, is useless. That's right, it's completely useless. And I'll tell you why. Because there isn't anything you can learn about a company that is not already known to hundreds of thousands of people. This is the one thing that just boggles my mind on the people that rely so heavily on fundamental analysis, because no matter how long you study, somebody's going to know something that you don't, and quite a few people are going to know things that you don't. And if you do figure something out, everyone else already knows that. It's already going to be factored into the stock. Okay, so you can't really get an edge studying companies. There's nothing you know that's not already reflected in the price. Most people that use our stuff realize that, and they go exclusively by charts. Because you see, worldwide speculation is what drives stocks. Back and forth, back and forth. It's everyone's composite opinion that makes the market go up and down or a stock go up and down. That's the real reality of it. And thus, it's all reflected in the charts. You know, you get something like that, it looks very complicated, but for those who know how to interpret charts, you can see, you can almost read the mindset. It's like a mirror into the soul of the market's mind or something like that. And that's what every one of our products we've made up to date are all about, is how to interpret those patterns in order to read the tea leaves, as it were, and to get an edge. But here are the facts. We've taken technical analysis as far as it can go. In other words, power scan, signature, track trading, etc. These are superb and unbelievable instruments, but they have limits. You know, and what those limits are is that we need a way to detect info that is not in the charts. In other words, insider info, big money plans and intentions, that sort of thing. See, certain things are not going to be in the chart because they haven't happened yet. And that's the only problem with technical analysis, is it's showing you what's happening now. And sometimes you can kind of sort of interpret the future by interpreting the current pattern. And that's how we've been doing it all this time. And it's pretty much successful. But I've been searching for the longest time for that one missing thing. How do you detect insider type of action? And hence, Wall Street smoking gun, because I discovered the way. And I'll tell you how it came about. This is a way to detect abnormally large bets on a stock's future direction. Now, the reason why that works is obvious. If you're an insider, now remember, I'm not necessarily even talking about illegal insider stuff. It could be legitimate insider stuff. You know, like you just know certain things that are not necessarily insider trading, and you know, in your opinion, you know, it might be sharper than others. And here's the deal: if you know these things, you're going to make a fairly large bet, aren't you, on that stock? And that's what this is all about. Now, in order to cover this, in order to give you the theory behind what we're doing here, I got to briefly go over option basics, option trading basics. Now, huge disclaimer. This webinar and this service is not about options trading. I repeat, this is not about options trading. I've had to answer 10 people, maybe even 11. 10 people said, Gar, I don't trade options. Is this still relevant to me? I go, yes, this is not about options trading. This is about getting an edge on the inside activities. You could trade options if you want or not. You can trade straight stock if you want or not. This is about the action on options will indicate some huge information, and you'll see how. But you have to understand the basics of options in order to know why and how this works. An option is really the right, or a call option is the right to buy shares of somebody else's stock for a certain period of time. So there's a timeline and there's a deadline. Let's say, for example, this is 10 days. You have the right to buy these shares at a certain price for 10 days. That's an options contract. All right? Once 10 days is over, you can either buy the shares for that set price or you abandon the contract and it goes to zero. Here's an example. You're a shareholder and you own 100 shares of Microsoft, and at that moment the price is $27.50. You could sell the right to somebody else, which is an options contract, to buy those 100 shares at $27.50, no matter what the stock does. And this right expires in 15 days. That would be an options contract. Now, to get that right, they pay you, the shareholder, a premium of, I'm just making this up because I don't know how much it would be, of 50 cents per share. So you get 50 cents a share for those 100, which is $50. So this guy gives you $50 no matter what happens. Whatever Microsoft does, you've made $50. Now, this guy who bought it, on the other hand, hopes that Microsoft goes up because option contracts can be traded back and forth just like stock. So if Microsoft goes up, the options contract goes up. The value of the options contract. If Microsoft goes down, the value of the contract goes down. So the end result is the options trader can leverage big stock for pennies to the dollar. So instead of forking out $2,700 for Microsoft stock, all you got to do is fork out $50. And if Microsoft, say, spikes up, you could make, several 100% on your investment. That's what it's all about, in case any of you didn't know. But I'm not going to belabor this because, again, this is not about options trading. It's only indirectly about options trading. The major point is this. The person who buys a call option is betting that the stock makes a move in the near future. Hence, options are, in a sense, stock futures. You see that? See, the difference is it's very subtle. It's almost the same, but it's very subtle. If you go into the stock market one day and you see a stock getting heavy volume, that's people buying the stock right now. That means they like it now, today. It could be too late. It could have gapped up, and now it's too late. But if they buy an option contract on the stock, that isn't quite the same because that means they think it's going to move in the future. And, you can see option contracts as far out as, May, June, July. You see a lot of those being traded. That means people think the stock's not going to make a move for a couple of months. So options trading, if you get a window into that soul, a technical analysis, if you will, is more of a future sort of indicator, unlike any other technical analysis you can do. Now, to briefly cover put options, because all we've looked at is call options. Put options is the right, well, a call option is, as I said, is the right to buy shares, okay? A put option is the right to sell shares. Another way to state that is the right to go short. And as a result, the call option, if the stock moves up, the value of the option moves up. The put option, however, if the stock goes down, the value of the option goes up. Hence, put options are used to bet against the market or against the stock. So if you buy put options on a stock, you're hoping that it falls, it goes down. That's a completely different strategy, different philosophy. So that's a different interpretation if there's heavy put option buying. We can get into that later. For the most part, yeah, see, if put options go down, your portfolio rises if you have a lot of put options. Put options, by the way, are used heavily by big investors to protect their investment. If you think about it, it's a really good hedge. It's a good insurance policy. So if you own, 1,000 shares of Apple Computer, and Apple Computer is trading, say, at 110, you could buy some $100 put options for pennies to the dollar, and you're protected against Apple going below 100. Why are you protected? Because remember, the put option is the right to sell Apple at a certain price. So if you own Apple at 110 and you buy the right to sell it at 100, if Apple plummets to 80, you can still sell it for 100 to somebody, you see. So it's a stop. It's a floor that investors can create using put options. But I digress. That's just sort of an interesting trivia point. But it could be if you're looking at options trading as far as a technical analysis indicator. Okay, here's the essence of this whole thing, this whole smoking gun thing. The market is inundated with that's a typo. That should say opinions. It says options, okay? Market is inundated with opinions. You've got opinions everywhere from every guru, every analysis imaginable, including Mr. Mad Money himself, and yes, our own forums. All of us have opinions. There's opinions everywhere about the good stocks, the bad stocks, and the ugly stocks. And that's all well and good, but whose opinion is right? This can drive you nuts if you're trying to go by other people's, perceptions and viewpoints. Whose opinion matters the most? The answer is the large player. It's cash on the line. You see, this took me years to finally realize this, but everyone has an opinion, right? The opinion that matters is the guy that's putting big money on the line, because he is so certain about that, is that he's willing to risk that money. And that's the essence of this whole thing. So if some guy is just talking the talk, like Kramer, that's one thing. But if you take a look at the options activity, you see somebody just bought 10,000 contracts on, some obscure stock. I'm sorry, but something's up. I mean, that is an awful lot of money to plop down. Because remember, an option, you can lose 100% of it. So it's not like the guy's just, throwing money on a bunch of different positions on a whim. No, it just takes some real guts. So that's the essence of it. So I first paid attention to this a while back. Some of you who like to hang around Gar's Gold might have noticed this. But a few months ago, we had a stock called RF. I think it was Regions Financial. It was trading around $10. Might have been 9 or 10. It was something like that. And I really liked the chart, so I went with it, and some of us got call options on it. Suddenly, I think the next day, 6,000 contracts, a 6,000 contract trade occurred for a $10 strike. And mind you, the normal options for RF was like 100 per day. So somebody just did 6,000 contracts. This is just a fluke that we noticed this. The next 2 days, RF went on to soar. We all made a nice little windfall on the options. Now, had I seen that 6,000 contract trade at all, I would have really paid more attention to it. As it turned out, we lucked out. We happened to own the position before this phantom plunger did the 6,000 contract trade. In this case, it was dumb luck. But I decided after that I had to find a way to detect these unusual volume spikes, because that's where the real action is, and it's very covert for two reasons. One is it's kind of hard for people to notice. I mean, how many people really watch options volume? Like almost zero people. And if you can, how the hell do you watch all of them? Do you know how many option contracts there are? Well, I'll tell you right now, there's over 300,000 option contracts. I mean, 300,000 different types, not not actual contracts. There's actually, hundreds of millions of actual contracts. So how does one follow 300,000 contracts to see which one's getting heavy volume? You see the problem. And these big guys know this, and it's hard to detect. What I've even heard rumors and stories that prior to 9/11, there was heavy put option buying on the airlines. Now, isn't that interesting? Okay, now you see why I'm calling this Wall Street smoking gun. Now, that's not always the case. And in some cases, these guys making a big bet can be wrong, but it's obviously super valuable information to have. So I started researching this. I found out there are some services that kind of sort of do this, but they're very poor. They do not do it in real time, and they're expensive, and on and on. There's a guy on CNBC that talks about this every day, about unusual options volume. He has a service on his website, and he charges, and it's not very good. Plus, he doesn't know how to interpret the data correctly, in my opinion. I heard him talk about J.P. Morgan, a giant spike in J.P. Morgan's options a few days ago. And this guy on CNBC went on the limb and traded it. J.P. Morgan ends up tanking. I mean, so I could have told him he shouldn't have played that one, and I'll explain that later why I knew he shouldn't have played that one. Okay, what is Wall Street smoking gun? It's a real-time report on above normal options volume. Now, that sounds really simple, but it's not. We had to go through hell and high water to get this to work, and get this to work fast. Because like I said, there's 300,000 option contracts. Mind you, this service scans every options contract. It's not limited to the database in Traders Unite or PowerScan. No. And it's not limited to the small list of options we use in optionality. This is literally every conceivable. Now, okay, I take that back. It's not every conceivable option. We do eliminate some that are pathetically unliquid, like that might get one option contract traded a month or something. But for the most part, it's every option, and it's about 300,000 different contracts, different strikes, different expirations, that sort of thing, and several thousand stocks. So this report, how do we do it? No one else does. Well, because we have the fancy schmancy technology of scanning. PowerScan, you guys remember that old product? Which, by the way, is going to come out again really soon. But that old product is way ahead of its time. I don't think anybody can do real-time scans like that with lots of users pounding on the server and having their own custom filters. That technology is sort of unique to GAR's world, and that's how we're able to do this. So it scans all options, 300,000 contracts in real time. And it gives you a report. Right there, I'm looking at an older report. Before I had it incorporated into the actual program so you guys could see it, I just had to look at spreadsheets. And I want to show you. The question is, does this thing actually work? Of course it does. I wouldn't be promoting it, talking about it, or selling it if it didn't work. But I want to prove it to you right now. This is, I believe this was on this was December 31st, New Year's Eve. And I noticed that silver, SLV, is the second highest options volume. Now remember, this is recording above normal options volume. This is not just heavy option volume. You got to understand that. Take like QQQ. QQQ is one of the heaviest traded options on the planet. So is SPY. But those rarely show up on this list because they have to go well above their own normal to be on the list. Silver, SLV, according to this report, was trading at 18,000% above normal. And it was trading January 17th calls. And I'm thinking to myself, when I looked at that, I said, no, that is an anomaly because silver has been doing terrible. But then it hit me. I'm thinking, it's January 31st, These guys are buying heavy call options on silver. They must assume that silver is going to take off after the first of the year. And I think they were right, because people do tax loss selling at the end of the year. And silver had not been doing well all year, so obviously it's going to get sold heavily into the end of the year. And then people will pick it up again at the first of the year. So I took a strong look at that, and sure enough, here's a chart. Let me get, see, I'm going to give you several examples of this, and it's an eye-opener. Let's see here. Yeah. Okay. Right here is where the report, damn, hold on a sec. Okay, right here is where the report came out, okay? Silver, heavy calls. If you waited till the beginning of the year, which is right here, notice that it suddenly comes alive, and sure enough, look at that sucker go. Look at that thing. It's going all the way. Did I just, yeah. It goes all the way. This is today's date. Say that now that is a nice trade, and all you had to do is see that thing on the report, and notice that silver prior to the end of the year was just kind of going sideways. That's just one of the first examples I noticed from this data. Let me do another one. On the same list, right below silver, I noticed this GEVA, G-E-V-A. And I'll show you that chart. Very similar thing. Same date, GAVA, which is a weird pharmaceutical company, which I've never heard of. That's what's so interesting about this. You see stocks you've never even heard of, and you're going, what? GAVA, right here. Look how it's going sideways, okay? And suddenly, after the first of the year, it still goes sideways. So if you entered it here, you wouldn't have made any money, but if you held it, you do really good here, and of course you panic there, but you're still even. Right now, look at it take off. Look at that thing. It's just incredible that happened. Now, it isn't as easy as making it look. There are certain conditions that you want to enter and certain conditions when you do not, and I'll get to that in a minute. But I'm showing you several examples so you can kind of start believing me. All right, now this is one of my favorites, and the reason I'm pointing this one out is because it was such an anomaly. This was on, when was this? I believe this was very early in the year. It was like January 2nd or 3rd or something. And on this report, I noticed that TZA appeared out of nowhere. TZA. They were buying $12 call options. Now, TZA is a bear ETF for Russell 2000, I believe. And the market had been ramping up, and so I'm saying, what the hell is a bear ETF getting heavy calls all of a sudden? That means somebody knows something, is what I concluded, or they know more than I do. So I took a look at TZA. We've got a chart here. And I believe, yeah, I believe TZA was right. The report was right here, TZA. And the market was doing fairly well, and so I'm thinking, why would you want to go with a bear ETF? But sure enough, that thing spikes into outer space. I think I even had that one on Gars Gold. I didn't tell anybody why I liked it. Now, the other thing that call option is that $12 was a floor for the stock. So if they're buying heavy $12 calls, that means they don't think the stock's going to go below $12. And you know what's interesting? It is a floor. Look at that. $12 all the way across. So you could actually use this data for part of your technical analysis. You could have bought it here on that $12 floor. You could have got it here on that $12 floor. All right. So by the way, these are 60-minute charts in case you wanted to know. All right, refinements. This is what I was going to get into. I'm making it look easy because I'm picking the ones that I liked at the time. But now I'm going to tell you why I like them. When I was first doing this, I was just kind of blindly picking the heavy volume guys, thinking like, well, they know something's going to move. A lot of times they wouldn't. Now, a lot of times they would, and I could show you. I have a list of examples here, like literally like 10 examples, and I did not have time to show them all in these slides. But I noticed that some of them bomb. You know, there's like false positives. So here's why: because when you get a spike in options volume, it means one and only one thing. It means someone or some group thinks the stock will make a move before expiration. They could be wrong, okay? So how do you mitigate the risk? I mean, you don't know for sure. There could be a number of reasons for this huge bet. It could be a guy protecting his short position. Remember I said put options are used to hedge a long position. Well, call options can be used to hedge a short position. So there could be some guy with a massive short and he buys a bunch of call options to protect that position in case the stock, you know, soars. There's that possibility. There's another possibility that there's just some guy with a bunch of money who's just making some dumb pick. So you don't know for sure. And how do you get around that? How do you mitigate the risk? And the answer is so simple, it was staring me in the face for a couple of weeks, and it finally dawned on me. And I went back to verify that this is the answer, and it proves true, and you're ready for this? 100% of the time this ends up has been true in all my back tests. And that's confirmation. It sounds so ridiculously simple, but it's that simple. If you like something on the list, wait for a confirmation. What do I mean by that? Well, wait for it to start going up if it's a long position. Wait for it to, well, use your other indicators, your other chart analysis. Look at it. Is it at support? Does it look good? Does it look, might consider it otherwise? All those kinds of things are confirmation. How about market direction? Is it a long position? Is the market getting hammered? Is the market tanking? Well, that's not a very good confirmation to enter it right now. You see what I'm saying? Confirmation will give you, I swear, almost 100% positive results. Here's some examples. This one here is BIG, the symbol. BIG was detected on it was detected January 2nd. Now check it out. Had you went ahead and traded it January 2nd blindly right here, this was on the smoking gun report, you would have grinded sideways for 3 days. You would even have been down. You would have been red for a couple of those days. For all I know, you would have sold it and given up. Okay. However, notice this. Now that is a confirmation. How do you know that? Well, because it's breaking out of this range for one thing. Another thing, it's got decent volume and it's trending up. So there's your entry point because you already spotted it on the report. You now have an entry point, and take a look at that nice win. 1, 2, 3, 4 days of gains. Now it's just going sideways. If it were me, I would have taken the gains by then. All right. I think I have another example. Oh, I'm actually showing the entry point. Yeah, you see, that was the actual entry point of BIG. It was actually a day before I was showing you. You would have been way red for a while if you just blindly traded. Okay, here's another good one. Actually, this is not a good one. This is a bad one. This was my one loser that I've had on Gars Gold using this, and I'm ashamed of myself. But I wanted to show you guys why it was a bad play. XHB. XHB kept showing up on the high volume report 2-3 days in a row, and I said, that's got to make a move. Well, no, nothing's got to do anything. And here's the problem. Here's my mistake. There's no confirmation. See, right here is where it first detected it. The stock has gone dead sideways since then, which is not a confirmation. It even looks like it's trying to break some kind of resistance. Right here looks confirmation-ish, but it's not. You know why? Because that's pre-market. That's pre-market stupidity, frankly. Because right at the open, the thing just gets pounded. So that's not a confirmation. And guess what? It's a huge loser. So I could have avoided this loser if I would have adhered to the confirmation rule. Unfortunately, I don't think I was following that rule quite as strictly as I do now because I wasn't really aware of it. But I am now. And so should you be. All right, now I want to show you how you look at this thing. You go to Traders Unite. Now, by the way, Traders Unite houses this thing right now. That's because everyone attending, I think, uses Traders Unite, and if you're not, you can just download it. It's free. And it's, however, Smoking Gun has nothing to do with Traders Unite, nothing to do with Stock Vision, nothing to do with PowerScan. It's the first standalone service we've had in years. It stands by itself because in the very, very near future is also going to be website access, which means you could probably, run it on your iPhone, and just go to that site on your phone, and it'll be a nice little report, real time. And we're going to have like, you can have it sent to your email, also all kinds of different things. Anyhow, but it's in Traders Unite because it's convenient to see it there. And the icon looks like this. You click it and open it, and there's today's report. This would have been the end of day report. This was the final report for the day. What happens is this generates new data every 15 minutes. So after the market opens, 15 minutes, so it'll be 9:45 a.m., you get your first report. And if you happen to come in late and look at it late, it tells you when that stock was first located as far as unusual volume. Like in this case, FLML was located at 10 a.m. But so it's still number 2 at the end of the day. It's got, you ready for this, 84,000% above normal volume on its calls. Look at that. GLD gold is 72,000 above its norm. That's an interesting one to watch. And by the way, I would love to show you these stocks right here in Traders Unite. The problem is a lot of these stocks are not in our database. Because remember, unlike our other products, this stuff is scanning the whole market. So it's going to come up with stocks that are not in the current Traders Unite database. However, that's going to change. This coming weekend, we're going to overhaul that master list once and finally after many months, and it's going to contain just about every stock that'll be found on the option scanner. But if the stock does exist, I know GLD exists. If you double click, you can get regular old Traders Unite chart and take a look. See, now if I were considering GLD on this report, I don't see a confirmation, frankly. I see that it gapped up, but that's no confirmation because it's too late. Because the report didn't come out till today. Actually, now I'm wondering, maybe it was out yesterday. Let's take a look. By the way, so you can go to previous days' reports here, kind of like archives. I don't see GLD on here, so nobody thought it was a good bet yesterday. But now that we're here, I want to show you a really good one, this OKE. A lot of us actually had this one in Gars Gold because yesterday at 1 p.m. Eastern, OKE had a 40,000% increase in its normal option volume. Okay, so what's the rule? You wait for confirmation. There's your confirmation right away. You see that here. Let me try to zoom in. heavy option volume was right in this zone right here. I'm looking at a 3-minute chart. There's your confirmation. And guess what? This stock went on to gain huge. I think even from this point, after confirmation, I think it gained something like 4%. I think it even gained more today, maybe. Well, maybe it did at first. See, it went up at first, and then it kind of fell prey to the bad market. But so this one actually panned out. It was pretty cool. This Six Flags has been on this report for days, and it still hasn't panned out because there's been no confirmation. You see that? It's just been kind of downtrending. However, this is when it matters, the expiration date. Notice that the heavy calls on Six Flags is February 20th calls. Sometimes you need to pay attention to that because if the expiration is far in the future, that means who's ever making the bet doesn't think it's going to happen right away. All right, now you can also look at puts. Heavy put volume above normal. Now, you guys are going to say, can't you play puts the same way you do calls, like look for heavy put options and then trade, go short on those, whatever? The answer is, honestly, I don't know. My sense is that I don't think it works the same. I don't think it's quite the same as looking at call options. And the reason is because I think puts are mostly bought by big players as a hedge against their long positions. That's just my theory. I am going to have to research. See, one of the problems, this stuff is all new. And by new, I mean I've only been experimenting with these things for about 2 months now. And I've had to figure out like what the best way to interpret the data is. And it wasn't until I believe I have gotten it down pretty accurately as I finally have released it to the public and held this webinar. But I haven't done that much research on the put option side, so that still needs to be figured out. If any of you guys want to shed any light on that. Now, another interesting thing is you can also look at news. If you see a stock, like here's one, SIG, S-I-G. I have no idea why they like that one, so if I go to news, let's see if there's any news on it. I don't know, something about Tiffany's, I don't know. I'd have to look at it more carefully. Now, before anybody complains and says, Gar, this doesn't do anything, this thing called email, you are going to be able to have these reports emailed to you at your email of your choice and at the criteria of your choice. For example, you can have the full report emailed whenever it's available, or you could say just pick the top 10 or the top 20, whatever. You can have it sent only at end of day. You could have it sent twice a day. You could have it sent every hour or every 15 minutes. You're going to use this and you're going to say, Gar, it doesn't work. And the answer is you're correct. It does not work yet. It works in the program here, but nothing actually happens. That needs to be completed over the weekend or whatever. But the service is real. It's in real time, and it will update on your screen whenever you open it. In fact, it updates automatically even if you don't open it again. If I just let it sit there and the market was open, this would all refresh for me. Now, the other leg of this report is the high premiums. This is the one I thought I was going to get to tonight as well. This is a whole different thing. High premium report tells you which options are paying the most money percentage-wise to you if you sell them to somebody. Now, I can't tell you how valuable this is, especially to any of you guys who have IRAs. You want to get way, way, way better returns on your IRA? This is your answer right here. You find the stocks in this list. You buy them in your IRA, and I'm going to get into that in the next webinar. There's a whole technique to this. You buy them, you sell call options to other people, let them gamble and let them lose, and you make hundreds and hundreds of dollars on these transactions, and then you do absolutely nothing but hold the stock. And the reason this report is valuable is it gives you the highest bang for the buck of all the stocks in the stock market and all the strike prices and all the, we see how important this is. So you could probably make, I'm just guessing, I can't guarantee it of course, but I would say you could make an extra 10 to 20% per year on your IRA just using this data. Now if that's not worth the cost of admission on this thing, I don't know what is. But I'm going to cover this in much more detail next week on Tuesday night. But it's available for you right now. Look at that. If you hold TNA, look at that. If TNA call options that expire tomorrow, you could have gotten $5 a piece for those things. Do you realize how? So if you had 100 shares of TNA, you could have sold them for $500, and you're off the hook tomorrow. It's a free $500 into your account. That stock would have to crash $5 for you to, or it'd have to crash more than $5 for you to be behind on it. It's pretty amazing. All right. Now, Wall Street Smoking Gun is subscription-based. There's no grandfather. I know a lot of you aren't going to like that. But here's the deal. This stuff is very, very expensive for us to do. If you get the idea that we're trying to rush this thing out, we're not really. Because, you know, like I said, there's still some things that aren't finished yet, like the email and all that. But one reason we're promoting it now is because this stuff is super expensive for us. I mean, we've gone out on a limb to make this thing work and to run, you know, to get that kind of data scan. And so we're relying on people being super interested in this in order to support it. So this thing starts at $39.95 a month. It's less if you do 3 or 6 months. However, we are giving people a break by watching this webinar and bearing with me. If you put in the promo code SG, that's without the quotes, you get 1 extra month when you do 3 months, and you get 2 extra months if you do 6 months. At least that's something. But like I said, this stuff costs, and so it's hard to give this away or to give really super low good deals. How do you do it? You simply download the new version. You click Smoking Gun, and instead of getting that screen I showed you, it'll say have a Buy Now button. It's that simple, and it'll take you to the website. Hope a lot of people subscribe because I need to support the thing. We need to support it financially. And plus, it's great stuff. I personally, from this point forward, this is the most exciting thing we've done since PowerScan. I personally, from this point forward, cannot trade without this information. It's like super important. All right, so on that note, oh yeah, next Tuesday is the high premium report. And on that note, I'll see if people have any questions. Okay, I got a few questions here. Yeah, somebody's been going on about how the whole market went up Tuesday and blah blah blah. Yeah, I know, but that's why I pointed out that one with TZA, which came popping up out of nowhere on the report, and the market then tanks the next day. Very interesting. And by the way, I didn't have time, but I have like an endless list of examples of where something shows up on the report, and as long as you confirm it, it does really, really well. Okay, Bushy is asking something here. He says, this is great stuff you're working on, especially the high premium, which is what I've been trading exactly. Yeah, I've thought of you, Bush, because that high premium thing is right down your alley. And you asked, what's the monthly on this? I just showed you that. Yeah, you can see, you could probably, if you say you like to trade options, they're trading like 10% of the stock price, you'll be able to see that. It'll at least show you the ones that are close to that. The way that works, by the way, is it figures out, it's just an algorithm it uses. It takes the option price, it takes the expiration date, and then it takes the underlying stock price, and it figures out how much you're making per day until that expiration. That's what it basically computes. So the one reason TNA was at the top is because that was like something like 6% or something on the stock for one day or some crazy thing like that. There'll be a lot more data on this high premium thing next Tuesday. I haven't had a chance to really work out the details on what the best strategy is for that, but I will by Tuesday. I've been working on it. No, I shouldn't say. I should say I haven't had time to present the data in a webinar format. Somebody's asked here, the data, EOD data, or 20 minutes delayed. No. The data is real time, well, as real time as it can be. Like the first report comes 15 minutes. See, you get a new report every 15 minutes. So it's obviously not showing you every little tick of these options. It doesn't have to. Options don't trade that quickly. But what it does is, like, let's say it's you're looking at your first report at 9:45. That data is probably within a minute, because remember, it takes about a minute to scan 300,000 contracts. So by the time it reports the data, it's probably about a minute behind. Well, but who cares? A minute is nothing in the world of options in terms of the data. Like, I guarantee you, if some stock has 20,000% above normal a minute ago, it's not going to have changed that much a minute later. Somebody asked me the cost of high premium. It's the same. In other words, you get both reports for one price. Whether you want one or the other, or only want one or the other, it's all the same package. Now that's eventually going to change, but you guys are getting a deal, because it's eventually going to change to where they're each, let's say it's $39.95. It's going to change soon where they're each $39.95. But part of the show deal is that you don't have to do that. Somebody also asked that. No, somebody says a smoking gun and high premium each $40 a month. No, right now 40 covers both of them, and no, you can't do half of that for just one because it's too expensive on our side. Does it give a high volume exit of stocks? I don't understand that question. Can you explain the confirmation of the stock again? More examples. No, what I'm saying is, would it be more cost effective if you can extract free data from, say, Yahoo or something similar, supplying free data for you to cut your cost of maintenance? Oh my goodness, no, nobody can handle that size of data. It has to be a service that we use. No way Yahoo's going to give me enough data and fast enough for 300,000 contracts. Can you go over how to subscribe again? Yeah, it's very simple. You load the new version. Oh, by the way, I forgot to tell you this. Only the PC version is working tonight. By tomorrow morning, the Mac version ought to be up and running. I know, you know the usual gig on that. So, assuming you have the PC version, it'll prompt you for a new version right now, as we speak, on Traders Unite. Download it, run it, and then you'll see those icons. You'll see those two icons, smoking gun and high premium. Click on either one. It'll tell you, hey, it'll say, hey, bub, you need to subscribe. And you can say, okay, and click buy now. And it'll take you to the web page of our site. Now, we did it that way because of time constraint. The actual official buy page, which is separate from Traders Unite, is still being built. But all this stuff works great. I've tested it. It's just for you. Monthly subscription is not automatically. Somebody has to ask, is monthly subscription automatically renewed? No, the answer is not. I personally can't stand that, and that's why we're doing it that way. You'd have to go in and opt again. Is there going to be an annual subscription or just 3 or 6 months? I don't know. That's a good question. It might be an annual later. Right now we're limiting it to 3 and 6 months. I'm not sure why, but that's what most people usually do. I think that's why. 1, 3, and 6. But yeah, we might do an annual one later. And I'll tell you what, guys, if we get enough people interested in this, where we just get people after people, then maybe we'll think of a grandfather deal like we did on other products. But we can't do that right now because stuff's too expensive to maintain. Is access via an icon on Traders Unite? Yes, as I showed you, as I demoed in this webinar. All right, any other questions? If the presentation was a bit rough, it's because of time constraints. Really wanted to get this thing out this week, and to be honest with you, most of the time was spent on the actual technology to make sure it was working, was without bugs, with no glitches. And so this webinar has been put together literally at the last minute. Next week, you guys should attend again. Even if you're buying this thing, you should attend again because there'll be a lot more information and a lot, especially on the high premium. But I'll have a little bit more information and more examples on the previous reports. Yeah, by the way, one reason it's hard to show examples, and this sounds like a cop-out, but it's not, it's because a lot of the stocks that are coming up on these reports are not in the database, the Traders Unite database. So I can't really use Traders Unite and show you examples. Like I would love to use Market Replay and show you examples. The problem is none of those are in Market Replay because they're not on our list. Now that's all going to change. We're going to be overhauling that list this weekend, and we'll have a nice new database that will have most of the stocks that are in these reports. That's another good reason to attend Tuesday, because then I can show you a whole bunch of real examples. Somebody asked, will the webinar be posted on your website for viewing? Yeah, absolutely. It'll be recorded. It'll be posted sometime this evening, and we'll let everybody know. When you renew the product, you still get the. This is a question somebody's asking. When you renew the product, you still get the one price of $39.99 a month for both products. That's a good question. The answer is yes if you keep subscribing. The answer is no if you quit and then come back 6 months later. So in other words, we got to give people an incentive to keep it going and not drop out. So the answer is yes as long as you keep subscribing, and the system will know that you did that and you're kind of grandfathered into that mode. Dick asked, "Do we register for next week?" Yes, you have to register. Remember, that's the webinar system that we use. That's not us. For up to me, I would just give the link to everybody and say, come on in. But we can't do that. You have to register with the GoToWebinar guys. I'll remind everybody, listen, we're going to be pushing it really hard for next week, so yeah, I'm sure you'll hear about it. You'll have more than enough time to register. Someone asked, can these selections be sent to TT? I think you mean text messages. Yeah, actually, we're going to do that too. Maybe not. We're going to get the email working first, and after that, we're going to look at doing text messages. The only problem with that is that you have to kind of limit the guy. You don't want to send that whole report to your phone. It's like pages and pages of data. Somebody's going on and on about a trial. I think it's Bush talking about some kind of trial. What are you talking about? You mean Traders Unite trial? First of all, what do you started a new trial by accident or something? Well, first of all, remember, no matter how you do it, Traders Unite is only used as a platform to show this smoking gun thing. Even if you're a dead trial, the smoking gun will still work inside of Traders Unite because it has nothing to do with the trial. The trial is for all those other features, like track trading, signature, options, that sort of thing. Because the other stuff on the left side of the Traders Unite screen is all free, trial or not. And Smoking Gun and High Premium are separate services that have no connection to Traders Unite. They only connect in this sense that they're embedded in that program for your convenience. Because remember, it's going to stand alone later on, in addition to being inside Traders Unite. Be access a web page, all that sort of thing. Because this is you say I started a smoking gun trial. How could you start a smoking gun trial? There's no such thing on our website. Oh, that might be a bug. It won't work. I don't believe you'll be able to get into smoking gun with just a trial. There's no such thing. Cat, I've got to fix that. I don't even notice if that's true. Yeah, you might be right about it flashing for a second. That just might be a little glitch. All right, well, look, guys, I'm going to end off here if there's no other questions. If you have any questions I didn't answer, you can always ask me in the message center inside of Traders Unite. One more question here. Does the high volume indicate buys or buys and sells? That's a good question. The answer is we have no idea. We have no idea. That's obviously for every sell there has to be a buy. So indicates both. Somebody had to sell those options for somebody to buy them. It's just volume. Like if you see a stock and it says volume 100,000, were those sells or buys? You see, you don't know. Same kind of thing. But that means if an option says that there was 6,000 options contracts traded, that means somebody had to buy 6,000, even though somebody would have sold those 6,000. One way to kind of know the difference, if you really had to get nitpick, is if you go to the actual option quote, let's say on your broker or whatever. I could be wrong about this, but I believe that open interest increases if there are new option contracts sold. No, so now here's what I'm trying to say. If you own 100 shares of Apple computer and you want to sell an option on that, if you sold 100 options, those are new contracts being created that somebody buys from you. Open interest in the option quote would go up 100. Now, if you were buying option contracts from somebody else who already owned option contracts, open interest remains unchanged. I think that's one way to know the difference, but even that's getting kind of nitpicky. Because who cares? Somebody bought them if somebody sold them. Yeah, Paul just asked, how is volume related to open interest? And that's the answer. Open interest is the number of contracts actually created, I believe. Somebody can correct me if I'm wrong. Because when a stock starts out from scratch, let's say an IPO, there's no options yet. The first 100 options sold to somebody had to be sold from somebody who owns the shares or somebody committed to selling the shares. That contract is now created. Now the open interest is 100. If you then go and sell those to somebody else, there's a trade of 100, but open interest stays at 100 because there's no more new contracts in circulation. I believe that's how it works. So if you really want to know if there were new contracts created or whether they were contracts bought from somebody else, you'd have to know what the open interest was prior to that volume. I suppose we could figure that out one day if people thought it was important. Yeah, and Paul points out when the option is closed, open interest drops. That's correct, because by definition, a closed option means that it's done. It's either expired or it's been exercised. It's closed. But here's the thing: if let's say you sell some options, you have an option position, you sell it. Somebody else might buy that, so that's not a closed option. It's just transferred from one person to another. All this goes on behind the scene. I don't think there's any way to know except by watching that open interest. Yeah, somebody here clarified it. He says, let me read it to you. This will clarify what we're talking about. Sorry, excuse me. Open, also known as open contracts or open commitments, refers to the total number of derivative contracts like futures and options that have not been settled in the immediately previous time period for the specific underlying security. A large open interest indicates more activity and liquidity for the contract. For each buyer of a futures contract, there must be a seller. From the time the buyer or seller opens the contract until the counterparty closes it, that contract is considered open. So what I was saying is kind of sort of correct. Open means it's a newly created contract, and closed means that that contract is closed. I imagine they could trade hands in between those 2 points. That's what I was trying to say. All right, if there's no other questions, I'm going to shut down here, and you can always ask me next Tuesday or on the Message Center. Before I cough to death, I should end off.